In this module, we are going to discuss the implementation of the PWI forms for the new fraud and going concern sections, when we might do that, what is in the forms. And as always, we want to be efficient and effective, follow professional standards, and to document what we have done properly. Now, standard setters are, in their public statements at least, are going about raising public expectations of what an auditor can do or an audit can do. And they are implying that a carefully concealed fraud can be detected by the new audit procedures they're specifying. And they're suggesting that going concern issues can be detected by more inquiries of management, and that the auditor has some special skill to predict the future. Now, there's two videos on this channel where their specific statements are analyzed and then compared to what they've done in the section. And the statements of the new marvelous procedures aren't backed up by what's done in the section. Now, they imply that auditors have a unique and special ability to see and predict the future, which we don't. And an auditor can find fraud when others can't because they're auditors. None of this is true. There is no audit magic. The auditor has no special ability to predict the future and determine going concern, nor can carefully concealed fraud be found. It's just unlikely. And this, by the way, is in the face of the audit opinion saying that an audit is not a guarantee of going concern, even though in their press releases they say, oh, we're going to do so much better at it now. And it's not a guarantee that all errors will be found. That's stated, both of things are stated in the opinion. And fraud is one of those errors that we in particular might not find. And it's very clear from the section that finding fraud will be highly unlikely, particularly carefully concealed management fraud. Very difficult to find. Now, as an aside, and I'm not saying we should not try to find going concern issues and not try to find fraud. Of course we should. It's just that it's going to be highly unlikely. But in most of the lawsuits against auditors who've missed a fraud or a going concern issue, the judge has said something like, this was as plain as the nose on your face. So pay attention and take a close look at the financial statements and what seems to be going on, because if there's fraudulent financial reporting, it's often as plain as the nose on your face. And don't be distracted by documentation. There's one famous case where the auditor didn't notice that the client had made a $500 million journal entry to increase, I'm making that number up, it was a very large journal entry, increased accounts receivable from 60 million to 560 million. Absolutely no explanation. And somehow or other in the maze of documentation in the file, the auditor missed it. So don't be distracted. Take a close look at the client and at the file. That's probably the most effective procedure. It is very clear in standards that not everything done needs to be documented. It's clear from standards. Standards say shall document. If standards say shall obtain in writing, we have to document, we have to obtain in writing. Those two things mean the same thing. Standards just say the auditor shall consider. There's no requirement to document that, though you may choose to have a checklist prompt saying I considered. But it's very clear that not everything has to be documented. This is also clear from the two new sections. And I have a video on this YouTube site about what has to be documented and what doesn't. But in this circumstance, the problem is if we miss a fraud or we miss a going concern issue, and 95% chance that we're going to miss it, we are at risk that someone will say, oh, you didn't do this one procedure. And if only you had done and documented that one additional suggested required procedure, you would have found it. And you're going to sit there going, well, I don't know. So in terms of self-preservation and defense, And seeing in a smaller audit probably won't be that much additional work. It'll be a lot more work in a larger audit, in a large multinational. Maybe in terms of self-preservation and seeing the not documented, not done people say, if you've documented it, you must have done it. So maybe we should just go out of our way and document that we have done each of those things. Now, I really hate playing the not documented, not done game, or rather the if I document it, therefore I did it. I dislike that. But I think regretfully, in the position I've taken in the PWI forms, is we need to document everything. Now, in professional standards and IFRS, they talk about larger audits and smaller audits. And we have to be careful in small practice that we don't think that that means the largest audit we have versus the smallest audit we have. When standard setters are talking about large audits, they're talking large multinational corporations with a little bit tongue-in-cheek, over $200 billion in revenue. That's a large audit. And there are lots of those. Small firms don't do them. Those are the big four, and they will have ramped up their documentation and they'll be ready to go on this. For them, it will be lots more work, and fortunately for them, lots more fees. They still won't find anything. Or maybe they will. Maybe there's a 1% chance that they'll find something. But by and large, it's just going to mean more work and more fees for the big firms. Now, a smaller audit, and they don't, standard setters aren't clear when they talk about what they mean by that. But let's say a smaller audit is one with 1 billion to 200 billion in revenues. And that will also be more work and more fees, and we still won't find it. In terms of small practice, what I would consider small practice, and I've worked for both a Big Four firm and or two Big Four firms and small firms. A tiny audit, 5 million to a billion in revenue. Doing these procedures is probably easy. It's very simple. May not affect fees. We're not going to find it. An infinitesimal audit, under $5 million in revenue. A small daycare, which might, I don't know what the revenue might be, $1 million? Probably easy. Fees probably won't go up. We won't find it. Now, going concern of a small daycare like that, you probably need a note that says, if the government yanks our financing, we're done. Might want to have something like that said now. Certainly we'll have to say that, and certainly we'll have to have a going concern note in the future. So I regret it, but I think in terms of self-preservation, we have to document everything, and that's the approach I've taken in the PWI form. So that's the approach I've taken in the PWI forms, document everything. Indeed, what I've done is the references in the forms are to the paragraph in professional standards. So it's really, really clear that we're documenting everything. The other thing is, as I thought about doing this, the documentation, the shall document section at the end of each section, bring some sections in, some previous sections in. I think perhaps maybe there's some that it doesn't bring in. There are many that it does bring in. Rather than go through that, spend time going through that and being at risk that you're wrong, document everything. No need to consider which have to be documented, just assume they all have to be documented. And it's a defense against the, well, if you'd only done that one other procedure, you would have caught the problem. Now that's probably not true, but I would like to, if I ever get there, hope I don't, say, well, we did the procedure. Here it is, documented. We must have done it. We've documented it. Not documented, not done. Documented, must have been done. So I just think to protect ourselves, given that the standard setting boards are saying, oh, this is going to solve all the problems. It's not going to be problems. So we did all the procedures suggested by standard setters, and we didn't catch it. And there's a whole bunch of paragraphs in each of these two new sections that say we ain't going to catch it. Very difficult. So that's our defense. We did and documented everything we should have done. As I say, in a smaller audit, under $1 billion, unless it's a public company, that's a small public company, should be simpler in a smaller audit. Now, when do we have to do this? When do we have to implement it? One of my concerns always is changing forms, implementing new forms, because after this implementation date has passed, December 31st, 2027, in March of 2028, we are going to be doing both November 2026 audits, which it doesn't apply to, and December 31st, 2027 audits, which it does apply to. So we have a little juggling and making sure that staff are using the right set of forms on the right thing. So, and that's an argument perhaps for early implementation. Just decide we're starting now. Probably won't take that much more time. Staff will get used to it. And by the time 2027 year ends arrive, we're ready to rock. Now, why this silliness with the December the 15th year end? Well, there are a number of companies, tend to be in the food industry, that used to cut inventory on Sunday. They were closed on Sunday. They had a very specific way of dealing with their business week by week. Week was very important. Analyze this week compared to last week. So a lot of food companies, grocery stores, have a off calendar year end. And so, for instance, Loblaws has a 52-week year, and they end on the last Saturday in December or the first Saturday in January, keeping up to 52-week years. And of course, every once in a while they'll have a 53-week year, but never mind. So in 2024, the year end was December the 28th. In 2025, the year end was January the 3rd, 2026. And so the standard setters understand that there are large companies like this. So for instance, if they said December 31st, 2024, Loblaws wouldn't have had to apply until, what is it, 2026, because their year end began December the 28th, 2024. So that's just a unique characteristic of the grocery store business. There are other companies who focus very much on a week of business, and they will have these off calendar year ends. So the standard setters understand that. What are our implementation issues? Do we early adopt? Do we just start now? Do we need a new financial statement note now, even though it's not required? Are some other businesses, public companies, going to start upgrading their going concern disclosure and make our disclosure look inadequate? Staff training, when are we going to do that? Engagement and rep letters need to be updated before year end, presumably, and discussed with the client. And the least of the issues is when we need the new audit forms. All of these things are ready in the PWI package, but when does it make sense for a firm to start implementing this? So question number one, are we going to early adopt and deal with oh, you could have found it if you'd only done the procedures sooner issue? Being at risk for a year that someone will say, oh, you could have found that going concern issue if only you'd early adopted. How much work that will be, don't know. Issue for each firm to consider. Financial statement notes. For going concern, at least a new note or a note, if we don't have one now, will be required. Do we start now? It will be required effectively by the audit standard, but it makes it look like that's a requirement of GAAP. Is this required for reviews? Do we want to include it in review financial statements as well? Could be simple in a smaller entity, though I mentioned about a daycare where they may have to disclose that if their government funding is removed, they are out of business, though presumably everybody looking at their financial statements would know that. Now, both IFRS and Canadian PE GAAP say, yeah, it's simpler. All simple cash flow and access to financial resources, either internally or externally, should be really easy to do. And from a client perspective, are they protecting themselves with full disclosure by the client saying, we have no way of figuring out whether we're a going concern or not. We can't see the future. The auditor gets to say that in the audit report. Maybe management wants to say that in the note. Staff training. When do we want to do this? Summer of 2026, summer of 2027? Both? Don't know. Something for firms to consider. Now, the engagement letter for the 2027 audit needs to be updated. And if we are in the habit of getting that at the end of the 2026 audit, that will be, let us say, March of 2026 or 2027, we'll need the new engagement letter now. So early 2027, late 2026 depends on whether or not we annually renew engagement letters. We're not required to. My view is a really good idea. The engagement letter will have to be updated for this because the client is going to have to promise that they will update their assessment of going concern from 1 year from the audit report date, not just 1 year from year end. So client discussion might be needed. The rep letter is going to be longer for both fraud and going concern. Do we want to discuss that? Do we want to change the rep letter now to get the representations that the client is going to have to make for the 2027 audit? Start getting them now. Maybe we can do that without doing any additional work. So when are the audit forms going to be needed? And the audit forms are the very last thing we need, though we will need them for training, and we will need the engagement letters and the rep letters to give to the client and to discuss with the client ahead. In terms of developing the PWI audit forms, I tried to stay away as much as I can from updating the forms. Unless they need to be updated, standards are changed. I prefer not to. And that's because as a firm, picking when you use which form can be complex. So if you're doing in March of 2028 a November 27 audit, you use the old forms. And in March of 2028, if you're doing a 2027 audit, you'll need the new forms. So that's always a juggling act, and you don't want to use the wrong forms on the wrong audit. So maybe you start sooner. Maybe you just start now. I don't have to do it now, but I can. There's no rule against early implementation and getting staff accustomed to it, and you'd be able to say, well, we didn't do that procedure, but we really didn't need to. Again, when do you wish to implement? Do you wish to implement now, early implement, or do you wish to wait to the last possible minute? We'll also have YouTube videos up about each of the set of changes and how we've dealt with the PWI forms have dealt with each set of changes, so you might want to look at those videos as well. There's sort of 6 videos that you're going to need to watch about this. So thanks for listening.